Hello students, today we are going to solve from Unit 4 Final Accounts 1 question number 3. From the following information, prepare a statement of changes in equity. So, we are asked to prepare statement of changes in equity. So, the balance brought forward from the last year is 1 lakh, that is the credit balance. If it is given debit, that means this is the loss which is brought forward of last year. This is the profit which is brought forward since it is in the credit. If it is loss, debit would be given here. So first we will see the format here. I hope you all remember the format which I have already solved in question number 2. Okay, so this is the format of balance. So the balance brought at the beginning of P&L account brought down, that is in profit, that is our last year's profit which is brought down. So that profit is nothing but your 1 lakh. So let's record here 1 lakh and write down in the outer column also 1 lakh. Now let's follow the question. So current year profit after all necessary adjustments is 4,60,000. Before we do this current year profit, you should see that in the question whether he has given after tax. But here the word after tax is not there. That means tax would have been given in somewhere in the next adjustment. We should see that. So current year profit, necessary adjustments. Okay, after all necessary adjustment is 4,60,000. Tax is given in the next point. You can see here. Provide taxation for 15,000 is given here. That means tax we have to reduce 15,000 out of our current year profit. So 4,60,000 minus 15,000 tax, it comes to 4,45,000. So you record the current year's profit in our statement of changes. So profit for the year 4,60,000 minus 15,000, profit minus tax. This is also our retained earnings, that comes up to 4,45,000. So write here 4,45,000. Outer column also you write 4,45,000. Okay, I'm just following the question and doing it so that you will easily understand. Next, the board of directors approved the following apportions. So what did they ask you to do? Now based on this we will be doing each point. So provide 15% dividend on equity shareholders. He says that we have to provide 15% dividend on equity shareholders. So on equity we should pay them 15% dividend. That means out of our whatever is our earnings for that year, whatever is a profit, out of that we have to pay them. Whom we should pay? Equity shareholders, we should pay 15% dividend. So I'll show you here how do we pay that. Okay, once it is done. Next, we will keep it because it will be solved at the end. Say first point. So provide taxation we have already done. Taxation 15% we have already done. Dividend equalization fund. Now they are asking you to transfer some fund to dividend equalization fund. Whatever is our profits, we will not completely use it. We will keep it in the form of reserves and we will transfer them for each things. Okay, one is dividend equalization fund 21,000, transfer to debenture redemption reserve fund 18,000, and 20,000 to be transferred to reserve fund and 13,000 transferred to sinking fund. All these transfers we should do. So let's quickly do now. Okay, using our format. See here. Transfer to reserve, dividend equalization fund. So how much are we supposed to transfer? 21,000. Where are we supposed to transfer? To the other reserve. So write here other reserve. We are not paying it, but we are transferring it to reserve. So debenture redemption fund, he has asked you to transfer 18,000. So let's transfer 18,000 and keep it in the other reserve. And he has asked you to transfer to reserve fund. How much he has asked you to transfer? 20,000. So transfer 20,000 here. You write here 20,000, so that these are our transfers. And last transfer he has asked you to do it for sinking fund. 13,000 transfer to sinking fund and 13,000 we will keep it in the other reserve. Fine. Now come to the provide for DDT, dividend distribution tax. Okay, this already, now we will be doing it when we are doing it here. Okay, I'll show you. So the capital structure of the company consisted of following 3 items. Based on these 3 items, you will be doing how do we do that. Okay, we have to dividend distribution tax has to be we have to check how much are we going to transfer it there. Fine. Now next is, first thing before we do that, you should know that how much is your cumulative preference shares and how much is your convertible debentures. This you can see in your adjustments. So the first one is, here we have 1 lakh equity shares of rupees 10 each fully paid up, calls in arrears rupees 10,000. That means 1 lakh equity is not fully paid, equity shares are not fully paid, 10,000 are still in calls in arrears. You are still calling them and it is still calls in arrears. So 90,000 equity shares are still there. 90,000 into 10 each are fully paid up. Okay. 5,000 12% cumulative preference shares of rupees 100 each fully called up. That means how many is our cumulative preference share? 5,000 are our cumulative preference shares. Okay, here you write 5,000 into, how much is the value? 100 rupees. 5,000 into 100. So the value of equity component is 5 lakh here. Okay, same way, next one is 6,000